Not sure if you guys have heard, but Dallas Fed President Lori Logan has come out in the last 24 hours and basically painted a pretty clear picture that given the economic data to date being May 18th, she believes another rate increase is coming in the June meeting. I think we need to talk about this. I will just share my opinion. We will, of course, get the one and only Mr. Jonathan Twomley to engage as well. How you doing, sir?
I'm doing great, Michael. Good to see you again this week.
Absolutely, man. But before we get started on this critical topic, I think you have a thank you want to send out.
Yeah, I wanted to give a shout out to Carrick Young, who is a broker in San Jose. Carrick referred our podcast on mom and pop hotels to one of his colleagues who is selling an off-market hotel in a market that I'm interested in. I won't give more details about it because it is off-market,
No
but
problem.
it
East
is
Coast. East
It is,
Coast.
yeah, it is on the East Coast. And anyway, Carrick referred our podcast over to, or our show, our YouTube show, over to his colleague. And that colleague reached out to me today with this deal. And I just wanted to thank Carrick for doing that. So thank you, Carrick. It's great. I
Yeah,
appreciate
I
it.
actually know I know Carrick personally. He and I met once or twice on a street in Mountain View called Castro. So Carrick, nice job. Like what you're doing, buddy. And of course, if you have any off-market deals or JVs or anything in the Fresno area or Central Valley, hit me up because I would love to do deals, look at deals all the time. So I think that's fun. Get some deal flow going because of this channel. That'd be
Yeah,
awesome.
listen, and similarly, if you've got, mom and pop hotels that are in need of rehab in New York or New England or maybe even Pennsylvania, let me know. I'd be happy
Yeah.
to be interested to take a look at them. I'd say probably 30 doors or more is what we'd be looking at right now. But if you know of stuff like that, let me know.
There you go. Well, hey, let's get into this topic because I think it's important. Again, basically, talk of more rate increase coming in June. Obviously, we're seeing interest rates go up the last couple of weeks. I think that's more about the debt ceiling or whatnot. But I guess we'll just step back and talk about you. Do you see another rate increase coming in June? What may or may not she be trying to do, given this talk track?
Yeah, I mean, I had really thought that at this point we were kind of topping out with rate increases, or maybe there might be one more of like a quarter point just to kind of put a exclamation point on this whole period of raising. But it seemed to me like everything was pointing in the direction of, uh, you know, inflation maybe not being where they want it to be, but certainly on the right, the trend in the right direction, and unemployment not being goosed very much, kind of the classic soft landing, and markets kind of screaming and everybody being unhappy in real estate, and all those factors together kind of leaning in the direction of, yeah, time to like take a pause, look around, and see what we should do as opposed to continuing to run. So I'm a little surprised by this. And so the way that I read it, and I don't know how you read it, but I read it as uh, attempting to kind of scare the markets or jawbone the economy a little bit, so that they don't actually have to do a rate hike, or if they do one, it'll be pretty small. It'll be kind of like the minimum. But I think they're getting to this point now where they're like, come on, guys, we've raised rates a lot. Uh, Time for you to do your part and slow down.
Yeah.
and
Yeah.
and if you don't slow down, we're gonna hit you again.
Yeah.
So hurry up and cooperate. I think that's kind of the message they're trying to say, or she's
Yeah,
trying.
this is kind of the message. And again, Fed President Lori Logan out of Dallas. Um, I think she's doing, frankly, exactly what I hope Jerome Powell would have done at the Fed meeting last time, which was talk tougher. I think Jerome Powell put pause on the table. It, clearly put it on the table. The market kind of started betting that it was, the next day was 98% pause, 2% cut. Right, they were done with raises the next day. I believe the Fed has a job, and one of their jobs is talking tough, like you say. So, I'm not changing my opinion. I'm 100% convinced a pause is coming in June. Why change now? But to her credit, I think she's doing what she should do. She doesn't want the market to lead the Fed. She wants the Fed to kind of lead the market. She's trying to take back control, or the entire Fed is trying to take back control.
I mean, listen, you really don't know what the workings of the Fed are like, right? So you don't know if this is kind of like a planned thing, like a good cop, bad cop,
Oh, for sure. Oh,
or
come on.
this
Yeah.
could this could easily be a situation where the Fed board, and they're they're talking all the time,
Oh yeah.
said somebody really needs to go out there with the message that like, hey, we're not done yet. Don't get ahead of yourselves here. And so
Yeah.
she was tasked with
Yep.
being the
I'm
bad
not
guy.
even sure if she's a voting member. I wonder if it says in that because again, they have voting and non-voting members. So sometimes they send out the non-voting members to talk tough. It actually doesn't say in this article that I can find quickly. But yeah, no, I think that's part of the game. And if she sends out this message, what do you think would happen? Well, you would think the 10-year would go up, check. And I would guess you would think the stocks would go down, but across the board, again, as of 7:41 a.m. on the 18th, the Dow's up, S&P's up, and Nasdaq's up. So again, the message is, if they want to, I guess they can raise because the stock market's not scared.
Yeah. Well, let me ask your opinion on something that's related though. So I was reading
Sure.
something on LinkedIn this morning, a post about how, there's really a strong correlation between bank lending and unemployment, right? And
Okay.
there's a
Mm-hmm.
lag time, but the correlation is really, really strong. So with banks now pulling back because of interest raises
Mm-hmm.
and stuff like that, are we going to see unemployment start to spike in the latter half of the year as some people are predicting? So I'm wondering, what you think. I can, I'm not enough of like an economic historian. I mean, not at all an economic historian. I don't want to oversell that at all. I do follow things, but I'm not an expert. But I wonder, this situation where banks are pulling back from lending, at
Mm-hmm.
least in the real estate space, it's hard. It's a chicken and egg kind of thing, right? Because we're going to talk about price discovery in one of the
Mm-hmm.
later segments, but deals are not happening right now because borrowers don't want to pay as much as sellers want to get paid. So is it that the banks aren't lending, or is it the banks have nobody to lend to, right? And so
Mm-hmm.
at least in the real estate space, that's what we're seeing. Could be that for the rest of the economy, people are not, the banks are skittish and not lending on business because they're worried. But at least in real estate, that's is it because banks aren't lending or because people aren't borrowing, right? So we don't know. And then if that's depending on what it is, it could. I wonder. I'm just asking the question: does it have an effect? Do you still
Yeah,
see that?
there's no question, historically speaking, that lending is the oil of the economy or lubricant or whatever you want to call it. And if you track lending volume, right, total dollars, you can generally make a connection. It's lagging, obviously, but there's without question a correlation. So,
Yeah.
um, the other thing, right, because again, I do watch this stuff every day. I don't know if you're aware of this, but Monday of this week was a big day. We actually had 7 bankruptcies filed on Monday.
Hmm.
Some of these companies had billion-dollar valuations, 12 or 18 months ago, and now they're bankrupt. All of them went bankrupt for one of two reasons. One, they had a term debt coming due that they couldn't pay.
Yeah.
Or two, they were trying to raise capital and they couldn't get terms, so they just ran out of money. So it's not only real estate
Yeah.
not having transactions, but you're seeing, frankly, um, dead bodies, which are corporations that were held down by free money,
Yeah.
rise to the top now when these are cut out. So that will certainly lead to unemployment rising. The word that we have to define, because I'm not sure I agree or disagree yet, is spike.
Hmm.
What does spike mean, right? The last unemployment reading was 3.4%.
Yeah.
And if we put an end date of the end of the year, let's call it December 31st or January 1st, 2024. If you tell me unemployment's 4.5 or 4.6 by the end of the year, I'd say, yeah, that's probably pretty likely. If
Hmm.
you wanted to tell me it was 6% or 7%, like some of these people are screaming, there's almost no chance it spikes that fast this soon. There's such a lag effect that any real spike would be kind of middle of next year.
Right.
There's just the lag is too far out. So that's how I kind of look at it. There is a connection for sure, or correlation.
I mean, it's funny because some of the stuff, people was reading today, like, 2 million people could be thrown out of work as a result of, the what's going on right now. And sort of, well, I mean, 2 million, obviously that's a lot of pain for those 2 million people, right? But in the size of our economy, 2 million people is not that
Well,
much,
let's
right?
let's also talk about that because again, we were in an interesting time. Last reading, I think the JOLTS report had 9.4 million job openings.
Yeah.
So I've run companies or not. I have been a second line at companies. And first thing we're going to do is whack job openings.
Yeah.
Right. So again, okay. So we head into the bad times. That 9.4 could easily be 6.7 by the end of the year. That's 3 million jobs gone. But is
Right.
it really? Is it really 3 million jobs gone? I mean, really? Yeah. So you got to watch these numbers.
Yeah. Obviously. I was going to ask something else, but I totally forgot. So
But the other thing that's interesting for me when you hear folks talk about rates going higher is, well, is there going to be a correlation? Because we're already seeing debt go up, right? The 10-year reacted almost immediately up 5 basis points or 6, something like that. But we're operating in an environment where I believe cap rates are expanding.
yeah.
And as debt goes higher or the risk-free capital goes higher, I don't know that cap rates are done expanding. And I was curious what you thought on all of that.
Yeah, I don't think so either. And the reason is because I think like the volume has been so small, right? So that's actually probably kept cap rates in check, relatively speaking.
Artificially, right?
Yeah, artificially, because people are just holding their deals off the market to avoid selling them in this environment. And at some point, as we've been talking about, that's going to end, right? People are going to have to refinance. And a lot of the people who can't refinance, some of those weaker deals are going to have to go to market. And that's going to affect the price, right? Now, I've heard some I don't know, reassuring, I guess, depending on how you look at it, sort of stuff from Jay Parsons of RealPage the other day, where he was talking about the fact that the vast majority of commercial borrowers out there are, at least in multifamily, are fine. Like they're not at risk of being foreclosed on. Their loans were originated early enough, and they have enough runway left that they're just not really going to be affected by this. The problem is those few buyers whose timing is really bad, who were on bridge or who just happen to be coming due right now, those are the ones that are going to suffer. So, his argument is that enough to cause a crash? Probably not. But is it enough to cause some cap rate expansion? I mean, he didn't go into that, but absolutely, right?
Oh, it has to. It just has to.
Yeah, if the deals on the market are getting sold at a higher cap rate, then it's going to affect everything. And the interest rates at some point, despite some people out there who were arguing vociferously up until 2 years ago or a year ago, who now suddenly have shut up about how interest rates have no impact on cap rates because of dry powder, which never made sense to me. Uh, you know, that interest rates, it's just simple math. You need to have a spread over the interest rate or you're not going to do the deal. And so if
Yeah.
interest
Where's the equity come from if the risk-free rate of return is higher than your cap rate? I don't get it.
yeah, exactly. So you're going to have to, you know, GPs are going to have to produce higher returns, and that means they're going to have to go in at higher cap rates. There's just no way around it. So
Very, very cool. Well, Jonathan, do me a favor. Where can people follow you? You run an amazing Facebook group that I hope more One Rental at a Time fans join. What is it, and how can they join?
yes, it is Apartment Investors Club on Facebook. So just search for that on Facebook and groups, and just come on in. There's a couple questions to answer, but please let me know that you're from ORAD, because it's always nice to see when people come through. And if you want to join my email list, you can go to apartmentinvestorsclub.com, and there's a free download there, and it'll put you on my list if you download it.
Awesome. Thank you so much.
Mm-hmm.